Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So I'm back with another video of weekly index review and we're today gonna see how the week went by and how the market is placed for next few weeks. Before starting the video, standard disclaimer, I'm not a SEBI registered analyst and any stock discussed here is not a buy or sell recommendation. Please consult your financial advisor before taking any trade. So let's get started with the video, and first we're going to take a look at the Nifty 50. So as you can see, Nifty was falling from uh, past few weeks. It has fallen from around 18,600 to this week. Last week it went and made a low of around 6,800 rupees. So as you can see right now, Nifty is currently in a structure of lower high, lower low. As you can see here, Nifty is in structure of lower high and lower low, but it took support around the level we had marked in previous week's video of 16,700. A few points up and down, doesn't matter. So it made a low of 6,800 something, and after that it is showing signs of recovery. As you can see, this week, uh, 5 out of 4 days Nifty was up, and as you can see, it is approaching a key resistance level of 17,600. So currently Nifty is in formation of lower high, lower low, as you can see, but for the structure to change it need to give a close above 17,600. That would break the formation of lower high, lower low, and it will start making the formation of higher high and higher low. That would be a positive sign, and currently it is showing some signs that Nifty is recovering. As you can see here, this level, it is around 17,500 and 17,600 is a key resistance level, and once it crosses this level and closes above, gives a closing, weekly closing above this level, uh, it would break the formation of lower high and lower low and start making the formation of higher high and higher low. So keep this resistance level 17,600 key resistance level marked in your charts. So let's now take a look at the Bank Nifty. As we discussed in the last week's video, Bank Nifty fell from around 42,000 to something like 35,400 something. So last time we marked these levels of 37,700 and 37,240, but the Bank Nifty broke these two levels and took support at the 200-day moving average. As you can see here, we discussed that in last video that if Bank Nifty goes down, then this would act as a key support zone, that is 200-day exponential moving average. So as you can see, exactly at this level of 35,400, look at the wick, it took support, and since then it has been going up. But now, which the 37,700 and 37,240, which was our major support zone, these two levels that I marked in the chart, now these two will act as the key resistance, and for any further up move, Bank Nifty has to cross these two levels and give a close above that. Then uh, there there are chances that Bank Nifty will head higher and test its all-time high level. So structure is changing right now. No need to do anything, just wait for it to cross the level of 37,700. So now let's move on to the Midcap 100 index. So these were the two levels that were the key support levels, 29,840 and 28,845. These two were the key support levels that we had marked in previous video. As you can see, Midcap index also took support around this lower level, few points up and down, doesn't matter that much. As you can see here, it also took support around and made the low of around 28,933, which is roughly around 100 points away from the support zone that we had marked. And since then it has been going up and it is performing well than the Nifty and Bank Nifty, comparatively well. It's in a better structure as compared to Nifty. So our next resistance zone would be 32,260, and once it crosses this level, it can easily cross its all-time high level of around 33,240 rupees. So this is our key resistance level right now, 32,260. You can mark these on your charts, and this would remain our support. These two would remain our support zone if in case the structure changes and it again starts heading down. But as of now, it is going up, and good wide range candles are forming. As you can see, good wide range candles with the closing at day high. So there are chances that it can head higher and face some resistance around this level of 32,260, and give a little bit pull back and again try to head higher. So this is our key resistance level. So keep these levels marked in your chart. Now let's take a look at the small cap 100 index. Similar structure like the Midcap 100 index, but also these were the support levels that we had marked in previous videos, 10,574 and 10,415. So it broke this level. As you can see, look at the long wick, look at this candle, this whole candle. It broke this level, but it gave a closing above the support level. It violated the support level but gave a closing above it, and since then it has been heading higher, which is a very good sign, and it is close to its important resistance zone of 11,312. So there is high probability that it will cross this level this week if the sentiment is positive and the market is good. Then it can cross this level. It probably will cross this level of around 11,300. That is our key resistance zone, and then it can head higher to test its all-time high level of 11,876. So it can face a little bit resistance and even give a pullback. These two would remain our support zone for any future reference, 10,574 and 10,415. These would be our support zone, and this is our key resistance level that you have to watch this week. So now let's come to IT index. As you can see, IT is not doing anything lately. It has been in a consolidation phase. As you can see, up and down, and it's not going anywhere, as it's kind of forming a flat pattern. As you can see, this last time after it broke the consolidation, this whole consolidation region, uh, it went up some few thousand points from 27,000 to around 37,000, roughly 10,000 points, and since then it has been consolidating. It came down and again went up, again came down, again went up, and is kind of forming a parallel boundary, as you can see from so right now, uh, according to me, it would be better to wait for a clear direction, a breakout. So looking at the structure, it looks positive that it will most probably give a breakout on the upper side, but right now waiting for the breakout would be a good idea. And if it in case it gives a breakout, the breakout the key resistance level would be around 36,000 something. It is again so our key resistance level would be around 36,835, and once it crosses this level, there is a good chance that it can head to around 40,000 and even above. As you can see, after it has been consolidating from 2-3 months, and kind of structure is kind of looking good. uh, look at this point. It didn't touch this time. It touched the lower boundary, and look at this point. It didn't go down to touch the lower boundary and reversed from the middle. So waiting for the breakout would be a good idea. So mark this level on your chart. 36,835 would be our resistance zone. So now let's take a look at the auto index. As we discussed in the last video, auto index faced resistance at its all-time high level that was formed in back in 2018. Again, it tested that level this week, 2 weeks back. It tested this level, and after that it fell. So this was a small range that was forming, a kind of a small double top pattern or M pattern, you can call it anything, and after that it broke. This was a support level of 11,000 or 93 rupees. It fell from that level. Look at the candle, a wide range candle, bearish, a big bearish candle, and after that we discussed that the 200 EMA will act as a support. As you can see, it didn't tested the 200 EMA, but it came close to that, and after that it formed a small, you can say, double bottom pattern on hourly charts. As you can see, W or double bottom, you can call it anything, and since then it has been heading higher, and right now it's near the resistance of 11,093, which was the previous support, and which has now turned to resistance. For the moment on the upside, it need to give a close above this level on the weekly time frame. After that it probably will head higher and again test the all-time higher level of 10,100, and again the 200, in this case 200 EMA would act as a support level. So now let's come to Nifty Fmcg. So Nifty Fmcg was clear in a downtrend, low high low structure. As you can see, after that it fell, big white range candles, and again tried to head higher but again fell and took the support at 200 EMA that we discussed last week, that this would act as a support zone for FMCG index. As you can see, it touched this level twice, and again similar to Nifty Auto Index, kind of form of a small double bottom or W pattern, you can call it anything, double bottom pattern. And look at these two big white range candles, indicating a little bit positive momentum, but as of now it needs to cross this level of 39,400 before giving any meaningful move on the upper side and before testing its all-time high level of 42,000. So this is our key resistance level of 39,400. That is roughly 1,300 points away from the current price, and this 200 EMA will act as the support zone. This whole 37,000 to 36,800, this 200 point range will act as the support, and this 39,400 level will act as the resistance. Before testing its all-time high level, it needs to cross this level. So mark these levels in the chart and keep an eye out on it. Now let's come to the pharma index. As you can see, pharma index is one of the weakest index from amongst all the index we reviewed till now, and it's one of the weakest index. As you can see, it is trading below its 200-day moving average. It also showing kind of double bottom pattern. As you can see here, double bottom pattern, kind of a reversal, but right now 200-day moving average is acting as a resistance for it, and for any up move, before any significant up move can come, it needs to cross this level of 14,060 rupees. That is our key resistance level. First is our 200 moving average, and second is this key 14,060 is a key resistance level. Till then, Nifty Pharma is kind of a weak, kind of a weak structure, and this whole region of around 13,200 to 13,130 rupees, around 60-70 points range is a support zone. So this is your support zone, these two are your resistance zone, and this needs to be taken out. 14,060 needs to be taken out before it go up and test its all-time high level of 14,940. So this was it for today's video, and the market is recovering, no need to worry. It was a small correction, that is a healthy correction, I should say. All the markets fell and now even US is recovering, so no need to worry about. Keep these levels marked in your chart. As you can see, these are the level that we have discussed here today in this video, and Nifty is probably will start forming a high low structure once it takes out the resistance level of 17,600. No need to worry much about. Keep investing in good quality stocks, stocks which are making new high, that is showing relative strength as compared to Nifty. Those are the good stocks that will give a significant move in the shortest time, which are outperforming the market, which are forming new highs. So this was it for today's video, and if you learned something and enjoyed the video, please consider hitting the like button and don't forget to subscribe and share. Goodbye, take care.